Good morning. It's Thursday, December 4th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So, episode 545 of the Metals Minute. So, it's been quite a journey here. Looking at the precious metals overnight, they are slightly in the red here. And I wouldn't call this a pullback, I'd call it more consolidation for the moment. One thing that I have on my charts here is I look at the average true range and I look at the 14-day average true range, although I might tighten that up as we do see an increase in volatility. You look at the average true range on silver, it's about $2.06. So on the 1,000-ounce contract, you'd expect to see about a $2,060 move on an intraday basis in your account. You go to the gold market, it's going to be $82.40. And you go to the copper market, it's going to be about 11.7 cents. So you go back to gold, $82.40. Remember, they have a 1 ounce, a 10 ounce, a 33 ounce, a 50 ounce, and a 100 ounce contract here that you could trade. And what it does is it allows an investor or a trader in the commodities markets to really build out a number of contracts here to reach their risk profile and also their level of risk tolerance within their account. So if you do a 1 ounce contract, expect to see about an $82.40 move. You go to a 10 ounce, going to be $820.40. Now looking at that silver market and honing in on that, one thing I like to note on the charts as well is where are the contract highs, where are the contract lows. So the recent contract high on silver is going to be 59.65.5 on December 3rd. Something else that I'll note on my charts is, are we making a series of higher lows on the charts and higher highs on the charts? And also, where is that first lower high coming in on the charts? Like Bitcoin, for instance, we noted that we saw the first lower high about 3 sessions ago, and that also marked a bottom on that contract here for the moment. Now you look at the silver market and the flows here, we're seeing some of those ETF flows continue to add about 2 million ounces of silver in the holdings in the previous trading session, bringing this year's net total purchases up to 123.4 million ounces. That's the 4th straight day of growth. You look at year-to-date percentage change, up about 17% year-to-date. This brings the gold-silver ratio just below that 73-1 here, and a really big sell-off in that gold-silver ratio, showing you that there's more of a risk-on appetite with the industrial metals. I did observe some notable option spreads that were called out on the Bloomberg terminal this morning. These are not recommendations out to the public. These are not recommendations at all. These are observations. So part of my job, not only looking at risk management, looking at a signaling process of when the market is engaging in a bull market, a bear market, or consolidating, is really being a commodities detective to figure out the why. So you look at these option spreads here for COMEX silver spreads, trading with silver near those record highs. I saw the February 80-85 call spread trade out at about 2,500 lots. That was a new open position to take place. I checked the price on it. It's about 12 cents bid, 13 cents offer. So something that's like $650. And it's a $5 wide spread that could yield a gain of about $25,000 less what you pay for it if the market was able to close above that $85 mark at option expiration. Now looking at the NYMEX WTI crude oil futures and options here, I saw the March 73.83 call spread trade at about 2,000 lots. The March $100 call spread trade at about 1,000 lots. Again, not recommendations, just observations that we're looking at. Commodities detective. Think what is going on here, and think fractally, where we start to see one market impact another market and the dynamics start to change. Oftentimes we see the dollar index, we see yields, they start to move first here, and then what happens is plates start to move underneath the ground here. A lot of people mentioning, the carry trade here with the Japanese yen, the futures surging here quite a bit. And what could be happening there is that you start to see, yes, an exodus out of some of the US markets here, but really a lot of people questioning about, could this cause a significant breakdown in the market if you see material selling? Well, what I'm starting to notice here, because I track some of those movements over in Asia, is a lot of tech buying over there. So they're merely just swapping out one for the other, but the tech leadership remains the same, whether it's here in the US or it's across the pond. Now you look at those support levels on the silver market, bringing that back to it. The November 13th high, 55.06, the October 17th high, 54.33. I would expect that would define a major level of pocket support. Now you look at the broader picture in the equity markets with the S&P 500 trading back near all-time highs. The signs of the leadership has really been rotating here, and that's emerging. So big tech, it isn't necessarily leading with the bounce in the S&P 500 and the futures contracts in the pre-market relatively flat as of this recording. Again, what's happening, I believe, is that you're seeing some of that leadership come out of the tech market. It's rotating into some of these small caps, some of these other areas, and then it's rotating into some of the tech across the pond. Now, the bad news is good news on Wednesday with that soft ADP jobs report really boosting the expectations for a Fed cut next week. We'll see challenger job cuts for November on tap this morning, along with those weekly initial gains. So what led the charge here yesterday? Well, it was the Russell 2000 gaining about 2% on Wednesday. So look at the interest rate expectations, and one thing I use is the CME's Fed Watch tool. At the December 10th meeting, the markets now anticipate about an 89.2% likelihood that the Fed will reduce rates by about 25 basis points at that December meeting. Now, the Federal Reserve is in a all communications blackout period until December 11th. So when I look at the FX markets here, I see the dollar index here just slightly lower at 98.78. The euro currency just edging just a bit higher here at 116.80. I did note that the dollar index did break to more of a neutral trend, and the euro currency is threatening to break out to the upside. 10-year treasury yields, after bouncing up to that 4.10% on up to about 4.14, now pulling back to about 4.07. The VIX futures here kind of confirming that we are in a lower volatility environment, that the risk is back on in the US equity markets. It's much more of an investable market at the moment, in my opinion. You look at the volatility index here sitting at about 1775, well below that 20 level. You go to Bitcoin futures sitting at about 93,350, consolidating after yesterday's additional gain higher here and bouncing off of that 80,000 level, consolidating around 85, signaling that higher low on the charts, and then breaking out back to the upside. So you look at these other markets here and you look at the gamma in the S&P 500, because one thing when we look at the VIX, we look at Bitcoin, we look at the 10-year, we're looking at the dollar and the euro, you'll want to look at S&P 500 gamma exposure, and we're really back into a positive state, indicating lower volatility here. So that's where the market makers, they need to delta hedge with positive gamma. They sell the underlying asset as prices rise, and they buy those as they fall. Those actions, they counter the market trend here, leading to greater mean reversion and lower overall volatility in the markets. You go to Europe and Asia here. Well, the European stocks, they advanced on the optimism surrounding the Federal Reserve to cut rates and signs of a slowdown in the U.S. labor market. The labor market data has really been the key to the Fed cutting rates at this next meeting here, because of the fact we haven't seen inflation data come out. However, if you look at some of the inflation inputs, you look at things like energy making up one of the largest parts of it. I covered a piece here for the CME group yesterday where gasoline prices are hitting some of the lowest levels we've seen in multiple years here. We are back down, breaking down to significantly lower levels here, and you're seeing that because of the fact that oil prices comes down so low, that they're cracking, they're fracking, and they're starting to make more gasoline out of that oil, and it's really flooded the market here. Now you look at the Asian stocks, they have rose for a third straight day, led by gains in Japan as regional tech shares tracked their US peers higher. This is what I'm talking about when a lot of people are mentioning that carry trade. The way that I would most likely play it, because I don't see any reason to get real defensive in the NASDAQ here at the moment, would be looking at the Japanese yen more to the long side as they start to sell some of the dollar, they buy back some of their yen, they sell a bit of the NASDAQ here, but they're buying their tech over in Asia. So we're seeing the MSCI Asia Pacific Index advancing up just about under 1% here. We'll get those weekly jobless claims number, the September factory orders, the final reading on durable goods data, and then you look at some of the ETF flows here where they were selling gold, they were buying silver, they were buying platinum and palladium. So year to date, gold matching silver up about 17% this year, sitting at 97.7 million tons, and the exchange traded funds, well, they cut about 13,000 troy ounces of gold in those holdings. So if you guys got any questions, You want to talk more about futures commodities, you want to get an account open. A lot of people opening up accounts with us. They really enjoy the platform we have, some of the content that we put out here. They like the interaction here with myself and my partners as well. It's really easy to do. Send an email to info@bluelinefutures.com. We'll send you over the link to get started here. It takes about 5 to 10 minutes to get an account open with us. And remember that futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.